Hi all, welcome back. Please remember to subscribe if you are interested in the videos that are going to be coming out pretty much all the time because I do create them, if not daily, very frequently. I am a big fan of dividends investing, and the reason why is that while I do like growth stocks, and I definitely vote for also getting growth stocks in your portfolio for different reasons. I do like adding value also in my portfolio, and adding value that actually comes back in as dividends, to my money, and actually adds up. So the reason why I do like dividends is that there's actually many reasons, but the most important one is the fact that dividend stocks are generally not so volatile, so they don't go up and down so much. They tend to be more steady, and they do provide a source of income or a source of passive income, which really interests me, and it should interest everybody really. There are some investors out there who are not even thinking of buying stocks that don't produce income to them in the form of dividends. But obviously, this has to do with your level of risk and the level of money that you're willing to invest. So, if you have a big pile of cash, if we're talking about hundreds of thousands of dollars or millions, it may make more sense to actually invest in dividend stocks because they will provide you with considerable income, and also they're not gonna be so risky in comparison to growth stocks. On the other hand, if we're in on a highly growth era, as we are currently at the moment, for the moment at least, you may want to have a lot of value stocks, a lot of growth stocks as well, because the market is doing well. Again, this may change from one day to the other, but it's a general idea that if the markets are going well, you may also want to capitalize on the growth aspect, and if the economy especially is doing well. But I would definitely recommend that you also use some of your portfolio money towards dividend stocks, and that's what I'm personally doing. I'm like almost like 50-50 on dividend and value stocks uh, in my stocks related portfolio. So the way I do it is there's multiple ways really. I'm using a little bit of both. One of the ways that you could go about it is by using a Vanguard fund, and I do use I believe VHDYX at the moment, which is the Vanguard High Dividend Yield, I think, fund. And this has the added benefit that it's super easy to handle. Obviously, we just buy it, and it has very low fees, and has a very nice um, dividend gain every quarter. So your yearly gains are going to be considerable, and when stock value is added to it, it's going to be pretty good. I think last year it averaged like 18 to 20, something like that. It may have been a little bit more. But yeah, you don't know what will happen next year, obviously. But yeah, you're gonna be paid your dividends. That's the only one thing that's for sure. So I'm gonna have different videos to explain how dividends work and what is the concept behind them. But for now, you should need to know that every quarter your dividend stocks will be paying you an amount actually of your investment back. So you may have dividends that pay you 3% of the stock price every year, and so you would expect to make like 3% of your money back every year. And there's other aspects, and the most important aspects about dividends is their dividend growth rate, which means how quickly and how much the dividends actually raise, the dividend percentage raises. So companies every year, at least the bigger ones, tend to raise their dividends. That's in their best interest to keep their stock price high, and more investors interested, obviously. And so they raise their dividends by an amount. It could be 3%, 4%, with which is like a good growth rate. So there is the Drip Investing Resource Center, which I'm using here, which you see is dripinvesting.org, in which you can download an Excel a spreadsheet or a PDF, pretty much the same thing in PDF format, that will show you the US dividend champions, and you can download the aristocrats, and there's different, there's different classes. But once you download the US dividend champions and you download the Excel spreadsheet, you will see something like that here, and you see like champions, contenders, challenges, and all that. So champions are actually all the companies in the current stock market, and that's all of them, that are paying dividends and have been paying increasingly growing dividends every year for 25 years at least. And why is that important? Obviously, this is very important because if you know that the company is raising their dividends for 25 years consecutively now, it's very, very likely that they will continue to do so. That's in your best interest. And dividends work amazingly when they accumulate over years. And after like 15 to 20 years, their growth rate expands tremendously, especially after that amount. I could point you to all sorts of statistics and all sorts of charts, but it's easy to understand that with big growth rates and yearly growth rates, even if the stock price remains the same, which it won't for the most part, they will grow really, really well over the years. And what I would recommend for your dividend portfolio is to pick maybe 20 dividend stocks. But the way you pick them, and I would recommend a few ways here, is by taking a look at their current dividend yield, as you see here, which is this column. And I would generally recommend for a dividend yield of more than 2.5%. And in my application here in this app, which is from Mac OS, you can use the filter here. It's pretty easy. You just select the column I here, and just do a greater than 2.5, for example. And once you add the filter, you see that the companies are much less now that provide a dividend yield of 2.5 and plus. You could go for 3 if you want, but I think 2.5 is fair. And the next thing that I would look for, so you see that we have much less companies here, and you should also do that with contenders and challenges if you really want. I try to stick with champions, and maybe contenders also. But the next thing that you want to take a look at is the dividend growth rate, and you see there's a lot of information here which is you could take a look at, but if you're not an accountant, or if you're not really relevant with what they're talking about, it's not gonna be super helpful to you. So and I don't think you really need to know about it so much, again, unless you're an accountant or you're super interested in this kind of information. But what you would be interested in is the dividend growth rate that you see here. And this actually shows you how quickly the dividends grow every year, or every 3 years, or every 5 years. And you would look to have big numbers here. And what I would do is, first of all, lock my filters here. Unfortunately, that filters the first columns also that show what these are, but not a big deal. You can also hide those, for example, the ones that you're not really using. I don't remember where hide is at the moment, but there was a way to hide the columns. Anyway, I can't find it now, but there was like an option. It really depends on your software, but it should be easy to find. I don't want to waste time now, but yeah, you can hide these columns. And what I would look for, this is the dividend growth rate here. I would look for the dividends that grow well over the years. And you see, for example, this one here has been growing at a very nice rate over multiple years. All this, for example, has not been doing very well on the 1 year and 3 year growth. So I would actually remove it from my list. I would keep those that have like an average of 3 to 4 for the most part. And obviously, if they have more than this, I would be even more interested. So for example, this one, which has 9.4, 71, 82, 96, that's a very good growth rate. And it also represents, it also has a nice dividend yield, which was 2.61. So this would be one of my potential buyers here. And if we're like taking a look at the next one, for example, similarly, this has a probably even better than this one even. So Altria, for example, which is a very well-known one, and I would definitely buy that. So the next thing I would take a look at if I wanted to add to that picture is take a look at the cash flow from the companies and see how much cash they gain every year, and how many dividends they pay. So is the model sustainable? And if I'm seeing that they're making enough cash, which is obviously the most important thing, then the business is sustainable, and my dividends would be pretty much secure and safe. So yeah, these are some techniques and some of the ways that I would recommend. At some later tutorial, if people are interested, and obviously if I get many more subscribers and likes, and people like my videos and all that, I will probably be creating some sort of a program that will automatically calculate all this. And I wanted to do that for a little while now, because I think that's super interesting, and it would help me quickly identify these stocks. But yeah, for now, please let me know if you like if you would like to see something like that. And also let me know how you pick your investments in terms of dividends. How do you pick your dividend stocks? Thanks for watching this, and I'll see you soon. Bye.